Senator Warren was questioning there. Michael Hsu, the CEO or the acting comptroller of the currency, and sorry, our thing is a little messed up right now. Acting comptroller of the currency. It's great to have you on right now. I do want to get your reaction to that soundbite we just played and what you had to say in front of lawmakers yesterday.
Thanks so much for having me. What's really important when there's a failed bank situation, especially where that bank is fairly large, is that financial stability is first. We've got rules, we've got laws, we've got to follow those. And in addition, we've got to make sure that the government's acting in a coordinated and timely manner, that losses to the deposit insurance fund are minimized, and that the risk of contagion and uncertainty is kept in check. That's what drove my decision-making that weekend.
Okay. So we have had some commentary. There was the reports today about Secretary Yellen talking about the possibility of more bank mergers. She had discussed that actually earlier in the week in an interview, too. This came up yesterday in front of lawmakers. You made some comments as well. Just the fact that we're seeing some of these headlines sent regional banks lower, and the sense being from investors that perhaps there was still more turmoil, more pain among the regional banks, and that would be triggering potentially a wave of M&A that regulators would be open to. Is that the right way to see this, given everything that we've had play out in the sector in recent months?
I'm not sure. Let me first say the banking sector as a whole is sound and resilient. It's strong. It's got capital. It's got liquidity. We've been on the balls of our feet with banks in terms of their risk management. So that's not the primary concern right now. Now, we do need and want a diverse and vibrant banking system, and that includes healthy mergers that are pro-community, pro-competition, pro-financial stability. Those are the kinds of things that we're focused on, and we're very open-minded to.
Practically, Michael, what does that mean about on the balls of their feet? I mean, you said that stronger resiliency requirements, stronger resolvability requirements would have helped the situation that we've seen over the past couple of months. So when you go into these banks over the past several weeks, and you're kind of pressing them onto the balls of their feet, what is it that you're finding? And I know you don't want to, necessarily mention details, but what kinds of things are you finding and helping them to fix at this stage related to those things?
So when I took this job a couple of years ago, I made guarding against complacency one of my top priorities. And what does that mean? That means, in terms of risk management, always being very diligent and vigilant in identifying the risk, measuring it, managing it, monitoring it. I think what you saw with the bank failures was that there was some textbook mismanagement. And being on the balls of your feet means kind of kicking the tires and constantly going over your assumptions to say, is this a prudent loan? Is this a prudent set of activities? Are we taking risks that we can manage and deal with? And that's what I'm talking about.
Any complacency?
When we do, we deal with it swiftly. That's okay. It's a big banking system, so you can't say, yep.
Yeah, okay. Just wondering if you do, and you're dealing with it. Now, tell me about deposit insurance. You mentioned that as something that should be updated. In what way do you think it should be?
So the FDIC put out a report. It's a really good report that lays out both the history of deposit insurance and, more importantly, some of the trade-offs for how we move forward. Clearly, the deposit insurance needs to be updated, but there's some trade-offs between financial stability, moral hazard, costs to the system that have to be weighed, and that report does a really good job. The
so
options
you agree
that they laid
with
out
that report, or are there ways that you specifically think it should be updated? Should small businesses have access to higher insurance, and how much higher?
I think the report does a really good job. There's that third option on targeted expansion for business payment accounts. I think that deserves very careful consideration.
So in light of that, I wonder how you think regulations are going to evolve and how quickly, given the fact that, as we've just seen with SVB as an example, bank runs, for example, or these crises of confidence can happen very, very quickly in the course of days or even hours. So how quickly can regulations catch up?
So I should start off by saying the system is sound and resilient. Depositors' money, the money is safe. Your money is safe. And that's because of the actions that banks have taken, the supervisors have taken to ensure that. Medium to long term, I do think that large banks need to be more resilient and more resolvable. We're going to work through the normal procedures and processes for notice and comment to get there. That's something we're working with the other banking agencies on.
Episode 170.